Good morning, everyone. Hello and welcome. My name is Jeremy Leffler, and I work in the Policy Office at the National Science Foundation, and it's my pleasure to welcome you to Day 2 of the 2023 Fall Virtual Grants Conference. I'm now pleased to present this session, which will cover topics in award management or your responsibilities once you receive an NSF award.
Thank you for joining us. This is the awards management session of the Fall 2023 NSF Virtual Grants Conference. Representatives from NSF will provide a presentation and overview, and will answer some questions about the award management process here at the NSF. There have been presentations on proposal preparation and submission and merit review. We'll also hear about policy changes and other things more. But this session, again, focuses on the award management. So this is for those organizations that are lucky enough to have their proposals awarded and you now have an NSF award. So we're going to sort of demystify a little bit of that process and answer some of the typical questions that come up. Next slide, please. I am Jeff Vaselli. I am the head of the Systems Office in the Division of Institution and Award Support. It is the same division where the Policy Office resides. My team and I are responsible for making sure that the NSF award system, as well as most of our other NSF systems, support our policies and procedures. And I am joined today by several of my NSF colleagues, Meghan Benson, Lynda Kummelt, Angela Turner, and Khoren Claiborne. I will turn it over to Lynda for the next several slides. Next slide, please.
Thank you, Jeff, for the introduction. Hello, my name is Lynda Kummelt, and I'm a Grants Management Specialist at the National Science Foundation. My colleagues and I will be speaking to you today about managing your NSF award. The mission of the Division of Grants and Agreements, or DGA, is to support the issuance of NSF assistance awards and other agreements by providing business, financial, and award administration assistance from pre-award through closeout. We strive to provide excellent and prompt customer service to our internal and external customers. The mission of the Division of Institution and Award Support, or DIAS, is to provide sustained excellence and stewardship across the grants life cycle and through state-of-the-art business practices and exemplary business assistance to key stakeholders within NSF and across the research community, and to demonstrate organizational excellence, agility, and innovation in ensuring NSF leadership within the federal R&D enterprise. Next slide, please. I'll now provide a quick overview of the NSF award process from proposal submission and to approval of the award. First, the institution will prepare the proposal for submission to NSF's electronic submission system, research.gov. Once it is submitted, the NSF program office associated with the proposal will make the review. Then the proposal will be either declined, which means a declination letter will be sent from the program office, or it will be recommended and head to DGA. There are 3 branches in DGA it may go to, depending on what program office it comes from. The grants specialist assigned to the portfolio will do an administrative review to check that the policies are followed correctly to budget the funds and that the solicitation specific terms are followed. Once that review is completed, there will be either a declination letter or you will receive your official award notice for your award. Next slide, please. DGA issues a few different types of awards. The principal purpose of the awards is to transfer anything of value from NSF to the grantee for them to carry out a public purpose, and not to acquire a property or services for NSF's direct benefit or use. A standard grant provides all the funds at once, while a continuing grant provides funds over the course of 2 or more years. A cooperative agreement is similar but has extra terms and conditions applied. A fellowship is different from a grant or a cooperative agreement because the funds go directly to the fellow. A grant or a cooperative agreement is issued to the institution, not the principal investigator. Next slide, please. During the fiscal year, DGA approves around 12,000 new standard or continuing awards, cooperative agreements, or fellowships. Supplemental funding and increments make up about 5,000 approvals, in addition to around 5,000 non-funded actions. Non-funded actions can include requests like no-cost extensions, additions of co-PIs, or changes of scope, just to name a few. Next slide, please. When the grant specialist is processing new awards and non-funded actions, there are several reasons why processing could be delayed. When an overdue report from a different award is attached to this action, it will prevent the grant specialist from processing the new award or action. Please familiarize yourself with the reporting requirements in NSF's Proposal and Award Policies and Procedure Guide, also known as the FAPIIS, and your award letter, if applicable. Annual reports are due 90 days prior to the end of the current budget period. So for instance, if your project started on August 1st, the annual project report is due on May 1st. Once May 1st passes, your project report would be overdue and will prevent increments from being released or other actions or new awards from being processed. The final annual report and the project outcomes reports are due 120 days after the end date of the award. Reports that are over a year overdue will lead to the awardee being put in what used to be called FAPIIS, but is now called Responsibility Qualification in SAM.gov. If you're listed on this public site, you cannot receive an award for 5 years. Another reason for delays in processing is if the requirements of the solicitation have not been followed. For example, career awards have specific requirements for departmental letters, who can serve as a PI, and/or specific budget requirements. Please make sure to follow the solicitation guidelines when preparing your proposal. If the proposal will involve human subjects or vertebrate animals, please ensure the IACUC or the IRB paperwork is submitted with the proposal. If it is not, the grant specialist cannot complete the processing of the grant. Unallowable or unjustified budget items will delay processing too. If I am checking over the budget and see that, for example, there are consultant services listed, but no consultants explained on the budget justification, I will have to reach out to the sponsored research office for that justification. If there are items that are not allowable per the solicitation or other NSF or federal guidance, this will also cause a delay. And now I'll turn it back to Jeff.
Thanks, Lynda. Let's talk about overdue project reports, my favorite topic. I don't like to read the slides, so you'll see that as I'm going through the presentation, but I do like to point out the most important items that you should be made aware of. So my first thing is don't let reports go overdue. Bad things happen, such as blocking the approval of funding actions, as well as no-cost extensions, changes of personnel, or even us NSF making new awards to a PI or a co-PI. So that blockage is for the PI and any active co-PIs that are on that subject award, as well as any of the other associated awards that they might have. So if I'm the PI on award A, and I'm also the co-PI on award B, we will block any of those actions on award B as well if there's an overdue report on award A. So again, it's nothing that you want to happen. We don't want it to happen. So again, that's the most important thing, is don't allow those reports to become overdue. And I'll talk a little bit more about what happens and what you should do instead. So most awards have annual project reports as well as final project reports. Now, the annual project reports are due annually, so every 12 months. I know we have lots of questions about that, and people don't understand the annual piece. That final project report, as we've clarified in the PAP guide, is actually the final annual report. So it is not a cumulative report, but it is the final annual report that covers that last period of time. The NSF pre-populates all of those report requirements for the PI as well as for the organization. And it's basically, we take that award period and we divide it by 12, and those are the number of reports that you have to submit. And the reports cover the entire period of time or period of performance of that award. Now, a lot of times, no-cost extensions will be granted, and the no-cost extension does not actually give you additional time to prepare and submit that report, but in most cases, it will actually insert a new report requirement for you. So you're actually creating additional reporting requirements if you do that no-cost extension. We're not like the IRS. That no-cost extension isn't an extension to file your report. It gives you additional time. And as I said, you have to report on the entire period of performance of that award. Annual project reports, as well as the final project reports, the final annual, must be approved by the program officer. It is not just enough to submit the reports. Again, it is the approval of the report that takes away that requirement. So until the PO actually approves that report, it still will remain and show out there and could become overdue even though you've submitted it. The other thing that I will mention is that the policy currently states that those project reports for the annual project reports should come in at least 90 days prior to the end date of the current budget period. That requirement is out there to give the program officers time to adequately review those reports, return them if they need to for additional corrections or anything to that effect. So don't expect that just because you submitted the report yesterday and the report becomes overdue today, that the program officer is going to be jumping on that report and approving it so that your report does not go overdue. Again, you need to provide the program officer enough time to review that annual project report and actually do a review and request any corrections or changes or additions that they might want to see for that report. There are, again, as I mentioned, proposals can be blocked from being approved because of overdue project reports. One of the reasons why those project reports are so important is we want you as the PI or co-PIs to take credit for your work. So it should go without saying that you want to supply those project reports. So sometimes the NSF, we're not quite understanding why those reports become overdue. Because again, that's your opportunity as the PI or co-PI to basically brag about your progress on your project and what you've accomplished. The other thing that I would say is NSF obviously is not just looking for positives, because again, as you know, in the science and scientific communities, a negative experience is just as insightful as a positive experience. So you learn from your mistakes just as well as you learn from your successes. So again, those project reports are important, and they can be used to justify giving someone supplements as well as additional funding. So again, you want to get them prepared and submitted. Next slide, please. The project outcomes reports are due at the end of the award. And what they are is they are a brief description of the outcomes meant for the general public. So they shouldn't be written in scientific jargon or scientific language or technical language. They should be written in a more everyday language. And again, it's just a brief description of what the project actually completed, what the outcomes were. And it's posted verbatim as the PI or co-PI, whoever submits that POR, whoever submits it, it gets posted verbatim. The NSF does not review them. Well, I shouldn't say they don't review them, but they don't approve them. Other general points that I should make about project reports: NSF sends reminder notices for all due and overdue project reports. As I mentioned, the annual project reports are due at least 90 days prior to the budget period. If you have not submitted your project report by that 90th day, we will start sending you reminder notices telling you that that report is due. One day after the end of the budget period, we start sending those overdue notices. The final project report and the POR are basically on the same reporting schedule. They are generally considered due the day after the end date of the project. and they become overdue 120 days after the end date of the project. There are some exceptions, so you do want to make sure that you are checking those report requirements, whether it be via your award letter or via the dashboard that is available on research.gov. The PIs and active co-PIs, as well as the SRO, have access in research.gov to be able to see all report requirements. The PIs and co-PIs see their own awards that they're affiliated with, and the SRO sees all of the awards for the organization, and you can see all of those. It's a good idea, a good general practice for the SRO to assign someone at the SRO to track those reports to make sure that they're being prepared and submitted, and that the PIs or co-PIs are aware that those reports are coming due. Because again, when those reports become overdue, they do block other actions. I will also note that only the PI and active co-PIs may prepare and submit the project reports. The SROs do not have that access. They cannot submit for the organization for the PI. Again, the reason behind that is they are considered technical reports, and in most cases, the SRO does not have the technical knowledge that would be necessary to put into those project reports. The last thing that I will mention is if there are, or the last two things I will mention, is if there are ever questions or issues, please reach out to your program officer as soon as possible. Don't let those reports become overdue. And the last thing that I will mention is don't wait until the last minute to prepare and submit the reports. Give yourself time to prepare and submit them thoroughly and take credit for your work. Next slide, please. Okay, NSF gets many requests to reset submitted and approved final project reports, as well as submitted project outcomes reports. Per policy, the submission of those reports indicates that that project has been completed, right? So the PI and the co-PI are almost certifying that they've completed that scope of work that was either originally proposed or you've submitted and had an approved change of scope for. So if you're basically saying and certifying that I've completed the project, I'm not expecting a no-cost extension, I'm not expecting another supplement, I'm not expecting to transfer this award to a different organization, why are we resetting that project report? Why are we resetting that public outcomes report? So the PI should always be in contact with your SRO and should always be asking questions about the funding that might be remaining on that award. You should be in contact with your program officer about any sort of request for a no-cost extension or for any questions that you might have about whether or not you've completed the scope of the project and what you should be doing before you submit those reports. So again, in the last slide I mentioned, making sure that you leave yourself time. Well, part of that time should be to check with your SRO, to check with your program officer, and ask them questions before you start submitting those reports. Because again, the NSF needs a compelling reason to be able to reset those project reports. It cannot be about the money that's remaining on the award. We will talk a little bit about no-cost extensions, but again, a no-cost extension should not be granted just because there's money remaining, because there are funds. And it's the same thing with the project reports. You cannot ask us to reset the project report because you become aware that there's $10,000 remaining. Again, it's not about the money. Many program officers will actually disagree with me, but program officers should really not be reaching out to you as the PI or the co-PI or even the organization to advise you to have your reports reset because there's funding left. That's really not something the program officer should be doing. I understand their desire to have those funds spent on the science. But again, from an NSF and federal policy standpoint, it's not about the funds being left. It's about the scope of the project. And once that project those project reports, those final reports have been submitted, it indicates that you've completed the project. Next slide, please. Just as basically a quick reminder, there are banners on research.gov that remind the PI and co-PIs of this policy. As you can see here, this is the banner message that you will see when you go in to prepare and submit that final project report or the final annual project report, as well as that public or project outcomes report. So again, we're going to ask you, if you ask me to reset that project report, why you did not read and why you did not pay attention to these banners, as well as the terms and conditions and policy of the award itself. Next slide, please. Okay, what is FAPIIS? You don't really want to find out what FAPIIS is, but it is a website. It's publicly available, and it's basically for the naughtiest and most egregious organizations for reporting overdue project reports. It is the Federal Awardee Performance and Information Integrity System. And again, it's for federal agencies to basically report non-compliance with the terms and conditions of a federal award, especially resulting from overdue project reports. Now, this requirement was placed on NSF by the Uniform Guidance, and we are looking at exactly when and how we will need to start reporting awards to FAPIIS, but you do not want to be the first organization with the first awards reported to FAPIIS by NSF or any of the other federal agencies. It's not a list that anybody wants to get on. Again, it is for those extremely overdue reports, basically reports that after 1 year from the end date have still not been supplied and approved. So again, it's a compliance issue, and you should be submitting those overdue reports, and you do not want to be reported to FAPIIS. So again, if you're having questions or issues, please feel free to reach out to your program officer or the grants officer that is on your grant letter, your grant notice. Next slide, please. So let's talk a little bit more about some general best practices and guidelines for reports. NSF continually looks at the policy language and systems to ensure clear policy and instructions are provided for reports, since it is so important. As you may recall earlier in the presentation, I did talk about how NSF in the PAP guide clarified that it's the final annual progress report. Again, that was us looking at that language and saying, what can we do to make this more clear, that this is not a cumulative report, but really that final annual report. So we made that change in the PAP guide. The reason you don't want overdue project reports is, again, nobody wants their funding held up. I can't tell you how many awards and proposals we get at the end of the fiscal year that cannot be made because there's an overdue project report. So people lose out on supplements. People lose out on their increments until the next fiscal year. So again, this can put you in a bind when it comes to your funding. Again, as I mentioned before, the AORs or the SPOs, SROs should be looking at the report requirements and following up with the PIs. You should be going out and looking at that dashboard, and that should be someone's job, is to go out and check with the PIs and co-PIs and say, you know that there is a project report that is coming due. Have you prepared it? Have you submitted it? Again, this whole concept is, it's a communication between the SRO, the PIs, the NSF, the program officers, the grants officers. It's not meant to be adversarial. I hear PIs talking about how their SRO won't allow them to do various things. And in most cases, the SRO is not allowing you to do something because it's not permitted either via federal policy, NSF policy, or the organization's own internal policies. So it's not that the SROs or the AORs are trying not to do things for you. It's, again, that they're following what they need to do. It's not, again, meant to be adversarial. So another best practice would be that a PI should not really be allowed to leave an organization if there are reports that have not been submitted. I know that this can't always be helped, but I know that I cannot leave the NSF without providing them my laptop, without providing them my ID badge. From an awardee organization standpoint, I would think that your HR department would have similar requirements, that before someone left, there's a checklist that they have to go through. And I would add to that checklist, do they have any federal awards, not just NSF awards, although that's really what we're concerned about, but any federal awards that they have project reports that they need to prepare and submit before they leave. Because again, we often hear, oh, well, the PI left and didn't supply that report, and now we don't have anyone that can supply the report, and it's now overdue. What do we do? Well, that puts the NSF into a bad position because this report should have been submitted. So the NSF is, as I mentioned, continually looking at what we can do to make this reporting process better and get those reports in. We don't believe that it's very onerous in terms of, we ask you to provide basically, in most cases, one project report a year, and it gives you the opportunity to boast and brag about your project. And I would imagine that you're keeping this documentation for your own purposes. But we do continually look at our policies, our procedures. We are continually looking at how we can increase our compliance, because we continually get questions from Congress, from our Office of Inspector General, as well as auditors and other places. So again, it's nothing that we're looking at, but it is something that we do on occasion need to look at additional options for what we can do to ensure that compliance. With that, I will turn it back over to Lynda. And the next slide, please.
Thank you, Jeff. I spoke a little bit before about the requirements for human subjects and vertebrate animals. All NSF projects involving human subjects must conform with the common rule, 45 CFR 690. 45 CFR 690 provides detailed information on what is required for research involving human subjects. The sponsored research office can work with the principal investigators to ensure compliance is met. Before an award can be made, all projects involving human subjects must either have an IRB approval or exemption, which will be reflected on the award letter you receive when the award is issued. All NSF projects involving vertebrate animals must comply with the Animal Welfare Act and related regulations. Before an award can be made, all projects involving vertebrate animals must have an IACUC approval. And what about awards lacking definite plans for use of human subjects? A clause will be included in your award letter that states that no work can be done with human subjects until IRB approval has been obtained. Next slide, please. For the participant support section of the budget, it's used for funding of participants in conferences or special programs in NSF solicitations, such as the REU program. This section is unique because there are no indirect costs charged on participant support. The NSF FAPIIS explains the definition of a participant as someone who is participating in an NSF-sponsored conference or training project. The caveat to this is that employees of the institution cannot receive participant support funding. Typically, speakers cannot receive funding, with the exception of speakers whose primary role is to participate. This must be very clearly defined in the budget justification. Participant support comes in the form of travel costs, stipends or per diem, registration fees, and items such as incentives. Your sponsored research office can help you define what costs go in what line of the budget. No human subject payments may be budgeted in participant support. If you plan to provide catered working meals or venue rental fees, these costs will need to be budgeted in G6 Other. Subawards must be approved by NSF. They can be included in the original budget or approved after the award is issued through an addition of a subaward prior approval request. If a subaward is approved for a specific institution at the time of the award, but it changes later, a prior approval request should be submitted. NSF does not negotiate indirect cost rate agreements with subrecipients. If no indirect cost rate exists, a de minimis rate of 10% should be used. The awardee institution must ensure the costs for a subaward are reasonable and appropriate. Finally, line G6 other. This line is for costs that do not fit in the other lines of the budget. For instance, human subject payments, subscription fees, membership fees, and catering costs would be budgeted here. These are just a few examples, so principal investigators should check with the sponsored research office or program officer for more information. DGA is also happy to help the sponsored research offices with any questions. All of the information on this slide is included in the NSF FAPIIS for your reference. And now I'll hand it over to Angela.
Thanks, Lynda. Hello, everyone. I'm Angela Turner, and I work in the Division of Grants and Agreements, and I am currently the acting team lead for the Directorate for STEM Education. As we continue with proposal budgets, a proposer that has never received a negotiated indirect cost rate may elect to charge a de minimis rate of 10% of modified total direct cost. And this is in accordance with 2 CFR 200. All indirect costs applied to the budget must be applied in accordance with your recent federal negotiated rate agreement. Indirect costs, F&A, are not usually allowed on costs budgeted as participant support costs, line F, unless the recipient's current federally approved indirect cost rate agreement provides for allocation of F&A to participant support costs. In most cases, institutions should use the same rate as used on the original award. Budget justifications. Each proposal must contain a budget for each year of support requested. The budget justification must be no more than 5 pages. The budget justification provides a more detailed breakdown of each budget category, along with the specified amounts. Each budget line item requested must be documented and itemized in the budget justification. If subaward costs are included in the budget, a separate budget justification of no more than 5 pages are required. Items listed under the budget must be necessary, reasonable, allocable, and allowable. Next slide. Typical areas of questions for the Division of Grants and Agreements. Conference proposals and participant support costs. Conference proposals information can be found in NSF's Proposal and Award Policies and Procedure Guide, Chapter 2, F9. Anticipated budget costs should be specifically and clearly identified in the proposed scope or work in the budget. Participant support costs must be allowable, necessary, allocable, and reasonable. And you can also see Chapter 2, D2F, which is also in the Proposal and Award Policies and Procedures Guide. An example of an unallowable cost under the participant support budget category would be speaker fees. Speakers and trainers are not considered participants and should not be included in this section of the budget. However, if the primary purpose of the individual's attendance at the conference is learning and receiving training as a participant, then the costs may be included under participant support. If the primary purpose is to speak or assist with management of the conference, then such costs should be budgeted in the appropriate category other than participant support. Addition of subawards and subrecipient monitoring. No part of an NSF award may be subawarded or transferred to another organization without prior NSF authorization. If it is necessary to subaward part of an NSF award, after the award is made, the organization's authorized organizational representative must submit the subaward module through research.gov. Subawardees must have a UEI number and be registered in research.gov. Award closeout and mandatory cost sharing requirements. In most cases, awards are administratively closed automatically based solely on the financial closeout of the award. If the award includes cost sharing requirements, federally owned equipment, special terms and conditions, the award will require a manual administrative closeout, which is an NSF action. The Division of Grants and Agreements will contact the grantee institution for additional documentation to close out the award. Next slide. NSF prior approval matrix, research terms and conditions. See the NSF column on this matrix for when NSF prior approval is required. Unless otherwise specified in the award notice or the applicable award general terms and conditions, no additional prior approvals beyond those specified in this matrix are required. When a change is required, it must be submitted via the notification and request module in research.gov. The other request option should only be used if there is no specific module option available. Example, for PI or co-PI changes, use that specific module to request the change. NSF's Proposal and Award Policies and Procedures Guide, Chapter 7A2, also provides a listing of required notifications to NSF. Next slide. Post-award requests and long-term disengagement. If the PI or co-PI will be disengaged from the project for greater than 3 months, for example, sabbatical leave, but plans to return, arrangements for oversight of the project must be signed and submitted by the authorized organizational representative in research.gov through the Change in Persons months devoted to the project module. The NSF program officer will provide written approval if satisfactory. No formal amendment to the grant will be issued. Failure to provide the change to the program officer could lead to termination of the award. So please reach out to the program officer and submit your request if needed. Next slide. Post-award request participant support costs. Prior NSF approval is required when the awardee or institution needs to rebudget funds out of the participant support budget category. The reallocation of funds for participant support costs module will need to be submitted through research.gov. This request is approved by the program officer. Note, no formal amendment to the grant will be issued. If additional categories of participant support costs, such as incentives, gifts, souvenirs, t-shirts, and memorabilia, is requested, NSF's prior approval is required and must be submitted via the other request module through research.gov. The request must include a strong justification and first requires the program officer approval and next the Division of Grants and Agreements approval. These are generally unallowable costs, and such costs will be closely scrutinized by NSF. And you can also see Chapter 2F7 in the Proposal Award Policies and Procedures Guide. Next slide. NSF offices participate in several monitoring activities. It is almost assured that NSF will visit your institution in one way or another. NSF always reach out to the sponsor research or business office in advance of a visit. NSF does programmatic site visits, which are usually completed by the program officer or NSF authorized representatives. And NSF have the right at reasonable times to make site visits to review your project's accomplishments, your management of control systems, and your administration and management of the award. Also, to provide technical assistance. So when NSF comes out, it is just look at it like free business assistance. The Division of Institution and Award Support also have contracted desk reviews. The DS, Advanced Monitoring Site Visit Program, in conjunction with my office, the Division of Grants and Agreements, we perform site visits as part of our annual risk assessment process. Awardees have been selected to receive a site visit, and the purpose of the visit is to evaluate the award administration systems, practices, and capabilities of NSF-funded recipients. We also provide business assistance. Also, the Division of Financial Management do baseline monitoring, including active payment monitoring and post-award financial activity reviews. Also, the Office of Inspector General, they also do audits. So, as I said, NSF does several monitoring activities. Next slide. No cost extensions. You must have remaining funds. You are required to assure adequate completion of the original scope of work with the funds that are already available. You must provide supporting reasons for the extension request and the revised period of performance. Provide the new end date in the request. The grantee approved no cost extension is up to 12 months. It can be submitted and is a notification that is submitted through research.gov. This request must be made at least 10 days prior to the award end date. And once approved, no formal amendment is issued. It will be reviewed by the program officer. If after that, the first NSF approved no cost extension, up to 12 months can be requested and 45 days prior to the award end date. Late requests must include a strong justification as to why it was not submitted earlier. The request will be considered for approval by the program officer, and if the program officer approves, the PI will be electronically notified. New end dates can also be viewed in research.gov. And now I will turn it over to Khoren.
Thanks, Angela. Hi, I'm Khoren Claiborne, the Grants Management Specialist supporting the Division of Undergraduate Education. Most NSF funds have a limited period of availability for expenditure. This timeframe is usually 6 years starting from the original year the grant was awarded. Most NSF funds have a limited period of availability for expenditure. This timeframe is usually 6 years starting from the original year the grant was awarded. NSF will notify grantees of any canceling appropriations on open awards so that grantees may properly and responsibly expend and draw down funds before they expire at the end of the fiscal year. For example, if your grant was awarded in 2018, the funds on your award will expire in 2024. When the appropriations are canceled or expiring, the funds are returned to the Treasury. Research.gov will block the submission of a no-cost extension if the revised end date extends the award beyond the appropriation cancellation date. Once the appropriations are canceled or expired, there is no option to extend the award to retain those funds. For example, if your current award ends September 30th, 2024, and the appropriated funds expire September 30th, 2024, and you try to submit a no-cost extension request to extend the end date to, let's say, December 31st, 2024, the system will block the action because the revised end date would be beyond the date that the funds will expire. Next slide. Here is an example of the notification a grantee would see in research.gov indicating that the appropriated funds for the award have expired and therefore no extension can be submitted. And now I'll pass it back to Jeff to talk a little bit more about award transfers.
Hi, I'm back. Let's talk about PI transfers now. If there's another grant topic that's near and dear to my heart, it's PI transfers. So previously I talked about overdue project reports and project reports. So let's start by defining sort of what a PI transfer is. The NSF basically refers to a PI transfer, but it really is an award transfer. It's a mechanism that the NSF uses to transfer an award from one organization to another. So again, we label it PI transfer, but it is a mechanism for the award to transfer. So imagine the PI gets a new job and the PI determines or wants to take their award with them from organization A to organization B. Well, as you may recall, or as you know, the awards are actually made to the organization and not to the PI. Let me repeat that. NSF makes the awards to the organization. So the organization is responsible for that award, and they do have options available to them if that PI determines or that PI leaves and moves to a new organization. One of those options is to agree to the transfer of the award from organization A to organization B. But it is not a requirement. I should also note that the NSF generally does not get involved in disputes. So if a PI approaches their SRO, their AOR, and says, I'd like to take my grant with me, I'm leaving, I'm going to a new organization. If the organization says no, that they don't wish to transfer that award, the NSF is not going to get involved in that dispute. That's a conversation that needs to happen between the awardee organization and that PI. I will also mention that a PI transfer is not a mechanism by which we split an award into two awards. So it's not a way that, okay, so let's have an award be at organization A and an award be at organization B, and they both keep working. By federal policy and NSF policy, there cannot be two awards for the same project, for the same purpose at the same time. So again, when we transfer that old award will actually get an end date and will get ended, and the new award will pick up at the new awardee organization. As I already mentioned, again, and this is a very important point, the organization has the award. It's not made to the PI. So again, the organization must agree to the transfer. Next slide, please. Some other best practices and guidance for PI transfers. As I mentioned, NSF will not get involved if the organization decides not to transfer an award. I would also encourage the original awardee organization to do a thorough account reconciliation of the award before agreeing to any transfer. And what do I mean by an account reconciliation? That means looking at all of your payroll, looking at all of the equipment costs, looking at cost sharing, if there was cost sharing on the award, looking at participant support costs, if there was participant support costs involved, looking at any subawards, and whether or not you have those invoices from your subawards. And you want to do all of this before you agree to an amount with the new organization if you decide to transfer that award. So why are you doing that? Well, the NSF only supports one transfer per award. So we do not allow for oopsies. I didn't transfer enough money from the old awardee organization to the new awardee organization, and there's still $50,000 remaining at the old awardee now that we've done our final closeout of the award, and we'd like to get that $50,000 over to the PI at the new organization. NSF does not have a mechanism to do that. The opposite is true as well. Oh, we transferred too much money to the new awardee organization, and now we forgot about that sub-awardee invoice that just came in, and we don't have the $20,000 remaining to pay them. So now we'd like to go back and have $20,000 sent back to us so that we can pay that sub-awardee. Again, the NSF does not have a mechanism to do that. And if you read the PI transfer agreement language, it states that in there, that this is really an agreement between the two organizations, and the NSF does not get involved in any sort of disagreements or any sort of issues with whether or not too much money or not enough money is transferred. Other things that you should know is that NSF currently only supports the PI transferring. So as part of the process, we do not allow the new organization to include or add co-PIs. The PI transfer in and of itself is complex enough. The accounting process that the NSF goes through to move the funds from Award A to Award B is extremely complex. The PI and co-PI requirements, especially now for various current and pending support updates and other things, is very complex. So for a PI transfer, the NSF basically has taken the stance and has recommended that let's just get the award moved from awardee organization A to awardee organization B. Once the award is at awardee organization B, then they can come in post-award and do that request to add co-PIs or even change the PI at that point in time. It makes the process much easier, and that is the reason why we do not allow co-PIs or additions of other personnel for a PI transfer. The other thing that I would mention is that PI transfers currently do not support revised budgets for the most part, except for very specific items such as cost sharing and participant support costs. Once NSF actually makes the award, that's the proposal budget that we make the award using. Once we actually approve the award, you have great latitude to move the funding around in various line items. So we don't really support revised budgets for PI transfers at the moment. And again, I would point out that before you do a PI transfer, if you do have questions, to please reach out to the NSF, reach out to your program officer, reach out to your grants officer, and ask those questions beforehand. It's easier to fix something before it happens than after it happens. So with that, I am done with my piece of the presentation. So I will now pass it off to Meghan and say, next slide, please.
Hello, everybody. My name is Meghan Benson. I am the team lead for indirect costs in the Division of Institution and Award Support. And we're going to turn our attention now to a discussion of unallowable costs. So as we know, not everything can be charged to a federal award. So it's very important for you as a PI or as a grants administrator to know exactly what can and cannot be charged to your project. And it's important to know this even at the proposal stage. Because if your award would be recommended for funding and would be required to undergo a cost price analysis or a pre-award budget review, the presence of unallowable or even potentially unallowable costs can result in a delay in the approval and eventual funding of your award. There are many different regulations that govern what types of costs are allowable charges. For our colleges and universities or any institution of higher education, our nonprofit organizations, which can include professional associations or museums, botanical gardens, state governments, all of you are going to follow 2 CFR subpart E for your cost principles. If you're a for-profit company, which often includes our SBIR and STTR awardees, you're going to follow what's known as the FAR, or the Federal Acquisition Regulations, Part 31. But it doesn't stop there. Costs must also be allowable per the NSF PAPPG, or Proposal and Award Policies and Procedures Guide. And they should also be allowable per federal travel regulations. And then other considerations is that these costs must also be allowable with your own statewide or organizational policies. Organizations can always choose to enact policies and procedures that are more restrictive than federal regulations. For example, I've heard that in some states, certain states may limit per diem for all state employees, which could include state university employees, to only $25 a day, which would be less than what maybe the federal travel regulations would allow. But in these cases, the more restrictive state guidelines would apply. So it's always helpful to know what organizational and statewide policies you and your organization might fall under. Next slide. Here are some examples of some commonly encountered unallowable costs, and these will be talked about more in depth by Cindy and Victor at today's 3 p.m. session. But some common pitfalls that we see for costs that could be unallowable. For that first one, proposed versus actual compensation and salary charges. This is when we see that folks will charge a salary to the grant that is different from their actual base salary. So for example, if your monthly salary at your organization is, let's say, $5,000 a month, you wouldn't want to charge more than that to the federal grant award, even if there's room in the budget. You want to charge salary using your actual base salary rate. We also see that people will incorrectly apply either their fringe or indirect cost rates, either by applying the wrong rate or to the wrong base. We also often see unreasonable travel costs, meaning costs for lodging or for meals or for personal reimbursements that are either unallowable or higher than the rates that are allowed by regulations. This next one is one that I see quite often, and this is meals and other refreshments charged to the awards for employees who are not on travel status. The NSF PAPPG does not allow for employees who are not in travel status to charge meals to the award. The NSF PAPPG does not allow for you to charge costs associated with refreshments for intramural meetings. So like your recurring weekly team meeting, if you wanted to provide refreshments for those meetings, those things can generally not be charged to the grant award and would need to go to a departmental or unrestricted account. And finally, certain kinds of participant support costs. Lynda and Angela have already touched on these, but certain kinds of participant support costs, such as field trips and t-shirts, branded items, are generally unallowable. They can be considered allowable in specific circumstances and with NSF prior approval. Next slide, please. All right, so now here are some various criteria that affect what makes a cost allowable. As I mentioned before, for a cost to be allowable to an award, it has to be allowable per the Uniform Guidance to CFR 200 or the FAR, depending on what type of organization you are. And of course, the cost must also be allowable per the PAPPG and any other applicable regulations. But that's not all that factors into a cost allowability. For a cost to be allowable, it must also be reasonable, meaning a prudent person in a similar situation would find the cost reasonable in terms of need and price. A cost must also be allocable, meaning it's directly attributable to this specific project. And this is very important when you have multiple awards because you need to know what costs are allocable to each specific award. A cost must also be necessary, meaning the award truly needed it. And also, for a cost to be allowable, it must be treated consistently. And this means that you can't treat a cost differently if it's being charged to a federal award than you would if you were charging that cost to a departmental or unrestricted account or some other non-federal funding source. A cost incurred for the same purpose must be treated consistently across all funding sources. And another note I'd like to put here is just because a cost was included in your proposal budget, that fact alone doesn't necessarily make it allowable. Even if you put the cost in your proposal budget, a cost must still meet all of these criteria to be considered an allowable expense. Next slide. Conformance. So allowable costs must also be charged in accordance with relevant accounting practices, generally accepted accounting principles or GAAP. They must also be charged in accordance with other federal and state laws. And finally here, and as always, allowable costs must always be adequately documented. Everything that is charged to your award must be supported by adequate source documentation. Even a cost that is allowable, allocable, reasonable, and necessary, and has met all of the criteria in all of these regulations, that cost could still be disallowed or questioned under audit if adequate supporting documentation is not maintained. For example, and one that I see quite often, if you would have people traveling on your award, and let's say that you're reimbursing meals by actual cost, you're not offering per diem, and you go to a restaurant, the restaurant will give you that long receipt with exactly what meals were purchased and what drinks were had. And then when you give them your credit card, they come back with a little receipt where it just has the subtotal, where you got to add your tip, the total, and your signature. Many travelers will only keep that small receipt and turn that in because, hey, it has the total of the cost. But what that little receipt doesn't show us is what was actually purchased in that meal. How can we tell the meal was reasonable when we don't know how many diners there were? How can we see that those costs were allowable if we can't see if alcohol was charged and verify that it was removed? So make sure, as always, that everything that you are charging to your federal award is supported by adequate source documentation. Next slide. So on this chart, we see that some costs are generally always unallowable, but there are some costs that can be allowable, but only in certain circumstances. So if you look at this chart, the costs on the left in blue are costs that are generally unallowable in every circumstance. And this would include things like alcoholic beverages or contributions and donations or goods and services for personal use. Those things are generally always unallowable and should never be charged to a grant award. But on the right side of this table are costs in green that can sometimes be allowable depending on certain circumstances and if specific criteria are met. And these include costs such as like advertising and public relations. These costs are generally unallowable, but if the advertising and the public relations costs were being done to promote the achievements of the specific federal award, or if these activities were being undertaken to perform required public outreach that's required under the terms and conditions of the award, then those activities could potentially be allowable. As Angela and Lynda have mentioned before, certain types of participant support costs are allowable, but generally also require prior approval. And then the last bit there, 200.432, there are certain costs associated with hosting a conference or a technical meeting that could also be considered allowable, but only provided that they meet all the federal requirements and all the criteria of 2 CFR 200. Next slide. So avoiding some unallowable cost pitfalls. We've already heard about prior written approval in this presentation, but just to go back to this, because this is a key component. What is prior written approval? As Angela mentioned in her presentation, NSF awardees generally have rebudgeting authority when it comes to your proposal budgets, meaning once an award has been made, awardees can generally move costs from one item to the other without formal notification from NSF, provided that what you're doing meets all of the criteria in the prior approval matrix that Angela showed you. But as she showed you, certain changes to the grant budget do require prior NSF approval, and prior means that formal approval has to come from NSF before you incur the cost. And these include things like You must get prior approval from NSF before you change a PI or a co-PI. You must get prior approval from NSF before you rebudget costs that have been allocated to the participant support line item. You need to get prior approval before you rebudget anything out of participant support. You must get prior approval from NSF before you enter into a new subaward. And on that note too, talking about subrecipients, prime awardees are ultimately responsible for monitoring their subrecipients to ensure that their subs are compliant with all terms and conditions and that they're only charging allowable costs to the grant. So whoever is responsible for reviewing subrecipient invoices at your organization, you're going to want to make sure that you include within your review process some way to ensure that whatever your subrecipients are charging to the grant is also considered allowable. Next slide, please. Okay, so participant support costs. Lynda spoke about these earlier, and these will also be addressed more in this afternoon session, but just to reiterate, participant support costs are those for participants or trainees, but not employees, who are attended NSF-sponsored conferences or training projects. And as we've heard before, participant support costs do not include most speaker fees, costs associated with room rental fees or catering. Participant support costs are only there to benefit the participants. As I mentioned before, a rebudgeting of participant support costs does require prior NSF approval. Indirect costs are not generally allowed on participant support. Participant support costs must be segregated within your accounting system and should have their own codes. So for an example, let's keep with travel, participant travel. If you have a travel account code where you're charging your employee travel, you should have a separate travel account code for participant travel so that you don't have participant travel charges and employee travel charges all commingled into the same account code. As both Angela and Lynda have mentioned already, certain kinds of participant support costs do require additional scrutiny, and these include things such as field trips to certain locations, branded t-shirts or gift bags or tote bags or other items. And finally on this slide, entertainment costs remain unallowable. And this would be true even if the entertainment event is an association with an NSF conference or meeting. So for example, a lot of times at technical meetings and conferences, the first day of the conference, there'll be some sort of like cocktail hors d'oeuvres reception on the first day, might have little refreshments and open or even a cash bar and an opportunity for the participants to mingle and to get to know each other and to network and to kind of just informally greet each other before the conference gets underway. Great activity to start a conference with, but because that activity has more of a social or an entertainment focus, you wouldn't want to charge the costs of the reception, the hors d'oeuvres, and certainly not the bar to the federal award. Next slide, please. Okay, and on this slide, as I've mentioned before, meals and coffee breaks. The NSF PA-PPG does not allow for meals to be provided to employees who are not in travel status. And the NSF PA-PPG does also not allow for meals, refreshments, or beverages to be served to employees as part of standing intramural meetings, meaning like your weekly staff meeting. On this slide also, fringe benefits. Fringe benefits should be charged to direct and indirect and to your individual awards in accordance with your actual certified effort. And another pitfall that we're seeing around fringe benefits of late is that you should be charging fringe benefits to your federal award using the same method that you charge fringe benefits across your organization. There are two ways to charge fringe benefits. One way is to charge fringe through the use of an actual fringe benefit rate. Other organizations will charge fringe benefits specifically to each employee. Either way is acceptable. However, whichever way you choose, you should be consistent across your entire organization. So If you are an organization who charges fringe benefits specific to employee, you should charge fringe benefits to your grant award specific to employee and not use a fringe benefit rate, and vice versa. And before I leave this slide, if I could just leave you with one final thought on allowability. Allowability can be a very tricky thing to determine. Most institutions of higher education and even many small nonprofit organizations will have either an office of sponsored research or a grants compliance manager who can help you determine what kind of costs are allowable. And so if you have any question about whether a specific cost is or is not an allowable charge to your grant award, ask these people first. And I would encourage you to seek them out early and often if you have any questions about allowability. Your NSF grants and program officers are happy to help, but they're not going to be able to answer your question as well as the people at your organization can, because they won't know what other organizational policies might exist that would also be applicable in these areas. And as I mentioned when I first started, organizational policies can be more restrictive than federal. And my own opinion here, my own personal golden rule for allowability is this: when in doubt, leave it out. If you aren't sure whether a cost is allowable, even after you've consulted all the regulations, you've done your research, you've asked your questions, you've talked to your Office of Sponsored Research or your grants compliance manager, and if there's still any sort of question in your mind about whether a cost is allowable, my advice would be don't charge it to the award. Instead, charge the cost to an unrestricted or a departmental account, and you should be fine. When in doubt, leave it out. And then last slide, please. And then here are just links to the different regulations that I've mentioned in this presentation: the Uniform Guidance, the Federal Acquisition Regulations, the NSF PAPPG, and the Federal Travel Regulations. Thank you so much for your attention, and now I'll pass it back to Khoren.
Here are a few keys to success for awardees managing their NSF grant. Read your award notice thoroughly and carefully. You want to ensure that you're adhering to the terms and conditions of the award and that you are complying with all of the relevant federal regulations and national policy requirements. Within your award notice, make sure to pay close attention to project or award-specific requirements, such as funding restrictions, special reporting requirements, or special terms and conditions. Next slide. Continuing with more keys to success, please remember to be sure that the award always has an active PI. As my colleague stated earlier, NSF grants are awarded to the institution, so it is important that an AOR or authorized organizational representative submits the necessary change or withdrawal of PI requests necessary to keep NSF updated of these administrative changes. For example, cases where the PI has left the institution or has been disengaged for several months and no request was submitted to change or transfer the award are cases you really want to avoid, especially if there are expenses being incurred during the period where there was no active PI. This would be a big cause for concern. So please be sure to submit timely requests in order to be reviewed and approved. When managing your award funds, be sure to verify that the incurred expenses are allowable, allocable, reasonable, and necessary in accordance with the PAPG and the terms and conditions of your award. Track your reporting requirements correctly and ensure that you submit reports in a timely manner. As a grantee, it is your responsibility to ensure that you have established appropriate written policies and procedures, oversight, and internal controls for managing your federal award. Make sure to give yourself credit by documenting these policies in writing and ensuring that they are accessible. Next slide. Remember to ensure that all staff have been trained and everyone understands their roles and responsibilities. Institutional support is very important to have when managing a federal award. Be consistent in applying your policies and procedures. Maintain timely and effective lines of communication, and remember that this is a collaborative partnership. Reach out to your NSF program officer for technical, programmatic, or scientific questions. You should contact your sponsored research office for administrative questions. Your SRO can reach out to the DGA portfolio manager for award-specific questions. As a rule of thumb, be sure to always include the award number in any email or communications to assist us with responding to your inquiry in a timely manner. And for all general grant policy questions, you should contact the NSF Policy Office. Next slide. In closing, remember to ask early and ask often. We are here to assist you. We do not keep count on the amount of times you reach out to us. If you are unsure about something, be sure to reach out for help. For more information, you can contact the NSF Division of Financial Management for questions related to payment, financial policy, financial reporting, and managing the award cash management service. Be sure to follow research.gov directions and edits and thoroughly read the error messages received. Take some screenshots of any error messages you're unsure of and include them in your emails to the help desk or the cognizant program officer. Remember to submit subrecipient information to the Federal Subaward Reporting System, or the FSRS. And finally, here are some final resources, including the contact number for the research.gov help desk, the NSF Policy Office website, and the Division of Grants and Agreements website. Thank you for participating, and we will now be taking questions.
Okay, thank you all. And I'd like to welcome my colleagues back on camera, our presenters back on camera. And before we get started in the limited time that we have, I just want to give a huge shout out to all of our presenters and our folks behind the scenes who have just been hammering out questions, answers to your questions left and right. So by my count, we've answered over 170 questions, and that's just amazing with the numbers of people that are here. So thank you very much for doing that. We have about 10 minutes to go through some of the questions that have come in that we feel will be helpful to the larger group as a whole. And I just want to take another moment just to emphasize what Khoren said. If you have specific questions about an award, start with the grants management, the grants officer that's listed in the award notice. That's your first stop when you have a specific question about an award. So we marked some of these questions that we want to answer live, and I'm going to start asking some of those. The first one that we have is for you, Jeff. Does a fellowship type of award, a fellowship, fall under the same rules as a grant? Perhaps you can talk a little bit about that.
Sure. Basically, it depends. I know I don't like to give that answer, but it does. There are fellowships can fall into one of two buckets. In many cases, fellowships have a specific program announcement or solicitation that provides guidelines on how they are to be handled in terms of the way the proposals will be reviewed, the way the awards will be made, any specific reporting requirements. So if there is a specific announcement or solicitation for that fellowship, you should be following whatever is in that solicitation or fellowship. Solicitation. There are also fellowships that include fellowship booklets that the program offices specifically write to provide additional information that may or may not actually end up in that solicitation or announcement. Those are also generally listed whenever we make that fellowship award. It will tell you in that original award notice that the award also has an award book, a fellowship booklet that you should be checking. And then finally, some of the other fellowships are actually made in response to the PAP guide, and they are just normal, basically almost like any other grant because they are following the PAP guide. So again, the answer is it depends, and you should really look at the solicitation announcement or PAP guide or Dear Colleague letter or whatever you are seeing that is announcing that fellowship program.
Okay, I'm trying to get some questions and touch on a number of the topics that were covered during the presentation. The next couple of questions, or the next question I should say, is about project reports. And we had a number of questions about when project reports are due and when they become overdue. So perhaps you could please just touch on again the definitions of when a report becomes due, when it becomes overdue, and then also talk a bit about the period that's covered by the final annual report and the project outcomes report.
Okay, I will take that one again. If you read the PAP guide and you read the terms and conditions of the award, NSF has the way we define an annual project report is it is due at least 90 days prior to the end of the current budget period. So that language was specifically written because the program officers wanted that 90-day period to do a thorough review of that project report and go back to the PI if they want changes made or if they need any additional information so that they can make sure that that report gets reviewed and approved prior to that end of the budget period. Because when that budget period ends, the report becomes overdue. And as you recall, that's when I said bad things happen. We block new funding, new proposals, new awards. So things get blocked when things are overdue. So there is that 90-day period basically from when we start sending out those award notices, telling you the report notices saying that the report is due. If you really wanted to interpret the policy correctly or in a different way, when we start sending those notices at 90 days out, technically that report is already overdue because the term and conditions said it should have been submitted at least 90 days prior. So NSF is giving you a 90-day sort of free period where we're resending you reminder notices telling you that that report is due and you need to submit it. We also start sending you those overdue notices the day after the end date of the budget period. So it's a little bit confusing, but again, those reports should come in. The best way to phrase it is as soon as possible within that 90 days or prior to that 90 days. Don't wait until the day before the end of the budget period. In terms of the final project report, again, that final annual project report is the final annual report. It's not cumulative, and it really covers any period of time that has not yet already been reported upon. So again, if you're going by the actual policy that's out there in the terms and conditions, and you submitted that annual project report 91 days out from the end of the budget period, that final annual report would include anything for that final annual period, as well as that original 90-day period from the other annual project report. So again, the reports can cover a little bit less than a year, or they can cover a little bit more than a year, but in general, they're covering a year. And in terms of the project outcomes report, again, what that is it's a very brief summary of the outcomes, and it's meant for the general public. So it is in layman's terms. It's not scientific. It is basically to address those, what happened in the project, what were my outcomes. It is not reviewed and or approved by the NSF. So it's posted verbatim from the PI. So.
Great. Thank you, Jeff. We had a number of questions about participant support costs. And specifically, I saw some questions about rebudgeting. So for my colleagues in the Division of Grants and Agreements, as it relates to participant support costs, what does an organization need to do if they want to move funds either in or out of participant support?
Can answer. Oh, go ahead, Lynda.
Go ahead, Khoren, go ahead.
So for participant support requests, prior approval is only needed if you are looking to move funds out of the participant support budget category into any other of the budget categories under the award. If you are looking to put funds into participant support, there is no prior approval necessary, but we recommend reaching out to your program officer, especially because if you are looking to put things into the participant support other section, those can be have different stipulations. So we want to make sure that we're those actually are other participant support costs. Outside of that, there are no other requests needed or necessary for participant unless you're moving money out of the category.
Great, thank you. Let's talk a little bit about indirect cost rates. And Meghan, for you, if an indirect cost rate changes after an award is issued, what should the organization be doing?
This is a
Which
great
rate should they be?
question.
Yeah.
This is a great question, and the answer depends on what type of organization you are. And so now heads up, everybody, so that you make sure you understand which organization you are. If you are a college or university or what we call an IHE, an institution of higher education, then your indirect cost rate is locked to the time, the rates that were in effect at the time of the award. Colleges and universities. That's all who I'm talking to right there. If you are a nonprofit or a for-profit, your rate could potentially change during the life of the award as you get updated rate agreements. And so I saw a lot of questions about that, but the answer really depends on who you are, what type of organization you are. College or university, your rate is locked. Nonprofit or for-profit, your rate could potentially change as long as there's nothing in the award letter that says otherwise. Also, if I could, Jeremy, just to take 30 more seconds,
Sure.
There were a lot of questions about membership costs. There are many different types of membership costs defined in uniform guidance under 454. Everybody immediately went to like conference registration membership costs. Those are allowable under A, but there are also membership costs under B, C, and D that aren't. So everybody started jumping in about membership costs. Double check the type of membership you're talking about, but membership in professional societies and conference registrations are generally allowable, but there are other kinds of membership fees that aren't. So double check 454.
Okay, thank you, Meghan. And we are just about out of time. So I do want to thank, again, all of my colleagues today for participating, for answering all of those questions in the Q&A. Thank you so much for doing that. And thank you, everyone, again, for attending. Take care. Bye-bye.